Tuesday, we have US dollar news later in the day at 10 a.m. Weekly, still looking bearish. No real huge up move that would change. Since previous days just been chilling. Didn't really do much. And we haven't tapped into, I don't think we've tapped into this yet. What's this low come into? 98, 584, 585. So yeah, we still haven't tapped into this daily for value yet. See if this other dollar has, no, it hasn't. So I'm just looking for previous day high sweep into the daily for value yet, and it's gonna be looking short. Pretty simple day, to be honest. We do have Asia expanding, but that could make for a low resistance liquidity run if we just melt through everything. So short dollar, and then Euro GBP. Let's see. Yesterday I was expecting Euro GBP to react bullishly off of this 4-hour for value yet, but it did not. So maybe vice versa of dollar, previous day low sweep for Euro GBP to go higher. We did have yesterday wick this inverse for value yet, so I feel like it's pretty likely that we'll just previous day low sweep and then have a strong reaction. So I am going to go with Euro once again. Let me just mark these out real quick just so I have them. I usually don't look at Euro GBP much after the fact, but still good to have them marked out. Alright, finally took previous day's high. Honestly, I didn't know if price was even going to do it for a while because it looked like this 4-hour was rejecting pretty strongly. But yeah, we ended up taking previous day's high. So I'm just going to be looking for displacement. So basically I'm just going to be looking to take any shorts if we have good displacement and a solid change in the state of delivery. Since this 15-minute looks like it's already rejecting, and considering we only have about an hour left in the session, I don't think the 15-minute will end up showing the entry. It's looking like the 5-minute is going to be the entry. And then Asia's lows will most likely get ran here is my guess. Daily for value gap is definitely going to get taken, especially with these relative equal lows. Pretty confident in that. So we have 3 hours left in this 4-hour candle. In first hour basically just took out previous day's high. Yes, it went lower first, but it still took out the previous day's high and it's already rejecting strongly. So I'm pretty confident the 4-hour candle will at least tap into the new day opening gap, probably end up rejecting somewhat, and then next 4-hour candle will probably be the one to run into this daily objective. So yeah, enough yapping. Alright, so this is what we're looking at. Looks like we finally got some displacement lower inside of the previous day high sweep and the 4-hour inverse for value gap that I have marked out. Here's the daily and what it's looking like. I'm feeling pretty confident it's going lower. Gonna tap into this daily for value interest with the relative equal lows like I was talking about earlier. 4-hour is pretty much in the middle right now, but considering it had just taken buy side liquidity with the 15-minute short-term high and it's displacing lower clearly, I'm pretty confident. The last thing that will seal the deal for me is how this 30-minute candle closes in the next 2 minutes. I just want it to close below this body of the candle, engulf it, and then honestly there will be a 15-minute for value gap made off that. So I'll probably end up looking for something like this. Let me just leave this marked while the 30-minute closes and then check out U. So there wouldn't be a there wouldn't be a 15-minute. Technically there would be, right? But that's, I mean, like compared to the dollar, it's not really clean. So if anything, I might end up timing it because it looks like this 30-minute candle is going to close past it. But I might just end up timing it with the dollar whenever the dollar taps into this 15-minute for value up. Or I could always just do this 5-minute right above it. Sacrifice some of the stop loss. I mean, I'm pretty confident that Asia's will be taken. I would probably just end up leaving a runner for that, not actually leaving that. 15 seconds, looks like it's right on the line, but we'll see. 475. So the 30-minute did not engulf it, but I honestly do still like the trade. So usually what I would do here is if we were more inside of London, I would just let this go, and on the second stage distribution is where I would look for my entry. But since we don't really have time here, I'm just going to look for my entry off first stage distribution. So the euro did engulf it, while the dollar did not. It got close, but it did not. I'm definitely still willing to enter this trade. So what I'm going to do is I just want to see what this entry would be. I am going to enter still. 465. So I'm just going to be a little greedy here. Since I am entering outside of my kill zone, I'm only going to want to enter on perfect conditions. So if it does tap this 15 minute, I'll go ahead and enter in off that. And we'll see, it'll probably end up being timed with DXY here. We'll see, but if it does tap into it, I'd want it to be tapped into within the next, honestly, 2 minutes, 3 minutes. This is 3.27R, and then I was risking, so I'm going to have to risk, or I'm going to have to target a little less for the consistency rule on Top Step, because I can't make more than 50% of my profit target in one trade. That's why I have to reduce my take profit, but I really do feel like this thing is going to run. These highs are probably good to go, and obviously the lows that we have on DXY. So I'm going to leave this entry set up, and I'm going to stop the recording here, and then I'll start the recording again if my entry gets tapped. So I didn't end up timing my entry with the dollar, even though it would have been totally fine too. Obviously, I see that, right? It's reacting off of it, but I think this is a pretty clear market maker buy model from what I can see. I kind of want to wait for the second stage distribution. So what I'm going to do is I'm going to wait for this 5-minute candle to close in the next 2 minutes. And then do this. How's it look on DXY? DXY still has a 15-minute. What else will happen is this 30-minute is going to close. Oh, actually not in the next 2 minutes. In the next 6.5 minutes, the 30-minute will close. Anyways, I'm going to wait for this 5-minute candle to close and look for an entry in this 5-minute for value gap it's going to make. Alright, so I placed the order, now entered it on the trade, and I can only do 5 contracts because of the funded eval. And that 5 contracts on this stop loss makes it $368, something like that. A little over half, and probably just around 0.75%. So I'm able to have a little bit of a bigger take profit in relation to my stop loss, because I'm not risking a full, my stop loss isn't a full 1%. Which I'm happy with because it's outside of my kill zone a little bit, but I'm still liking the market maker buy model. So I feel like I'm still trading part of London, right? So yeah, the take profit is going to be just over 2%, I believe. Hold on, let me do the math. Take profit will be just over 2% and just under 3. So that works with me. We'll see how this rides out. And stopped out. I was honestly pretty confident in it because it looked like it was market maker buy model. It still could be, honestly, but we'll see how it ends up going for the rest of the day. I still think it is bullish. Maybe it respects this 15-minute for value gap I was going to originally enter in on. We'll see how it goes tomorrow. I'm just going to go to bed, let it do its thing. So I think the learning lesson here is that my 5-minute entries are only good for 30-minute engulfs, right? Which Euro did engulf here. I know dollar didn't, but the entry should always be on the opposite end of my 30-minute, right? My entry should be here, which I know that that's a crazy entry with my stop loss all the way down here. So it's if I don't get this first one, then I should just be able to leave it. But I don't know. I'm gonna have to think about that because I feel like I just saw a trade the other day, or I took one, or I watched. I forgot where I saw it. Maybe I was back testing, but I could have sworn it was in live markets, where I took a trade on the second stage distribution. No, you know what it was, actually? I'm pretty sure it was a 30-minute engulfing, but by the time the 30-minute had engulfed and closed, my 5-minute entry was already on the second stage distribution. And I still put my stop loss at the overall 30-minute swing high, I think it was. I'll look at it tomorrow when I wake up, but I think my entry was definitely too aggressive here. And like I said, when the 30-minute engulfing is in play, my stop loss needs to be at that overall engulfing low or high. If I miss this entry, the first entry, then I'm good to enter as long as it's not past the 30-minute close, right, of the engulfing candle. Let's say I missed this entry, and boom, I could just enter here or whatever, right? And then just leave my stop loss there. And then if I need to bump down some contracts and go for a higher target. I know the 15-minute for value gap at the 50% of the range, which there isn't one right now, usually gets targeted. It's like this next high. That's 2 3/4 of R. You know what I mean? But if I need to open up my stop loss and open up my take profit and bump down my contracts, and that's what I gotta do. Shouldn't be greedy. I think it definitely was a little itchy to get in one, just because of the other night, and I just wanted to kind of fix that mistake because I was up 1%, and then the whole thing with my account, and then I took a silly trade, and then made that mistake. So I wanted to fix the mistake, right? But anyways, still a good learning lesson. 30-minute close, stop loss opposite end of the range, no matter what. If a 30-minute close. Then I'm gonna try and find that example that I was talking about the other day. I feel like it just happened, like maybe sometime last week, where by the time the 30-minute engulfed and it closed, we were already on the second stage for distribution. But it's gonna go to bed and see how this opens tomorrow, and it's probably gonna end up taking Asia's highs and previous day high. But whatever, I'm not mad. You're mad. So I did end up finding the screenshot of what I was talking about with the 30-minute engulfing, and by the time the 30-minute closed, we were already on the second stage distribution. I did end up taking, double check, I think I actually took a loss on this one. I remember, I can't believe I took a loss on this one. This was crazy. So I took a loss because this candle right here is where I entered on, right? You can see we have the dollar on the 5-minute and then the euro on the 30, so you can see the engulfing. I didn't like the way that this green candle closed, so I closed it negative, and then it just completely melted. I can't believe I took a loss on that. Anyways, so this is what I was talking about. So obviously we have the start of London at 2, and then we have obviously the candle had already engulfed, right? So first stage had already gone by the time the 30-minute candle had closed, and then the second, actually let me see if I can pull this up. Yeah, I did find it. Let me see if I can go to it on here. July 23rd. I wonder if I can double replay it. No, I can't. July 23rd, right here. I have to go back again. Alright, right here, July 23rd. I know there's no box, but actually I could probably change that. There you go. So obviously it wasn't the best correlated, but this is what I was talking about. So if we hover over to 30, so at the start of this candle is where the 30-minute closed, actually. So boom, as soon as this candle closes, new 30-minute, which means that the last 30-minute had gotten engulfed from 130 right here. Boom, close, open, close 30-minute, right? So engulfed, and then we were already on the second stage distribution. So this is what I was talking about. So two main things, now that I've actually, looked the recordings and everything. I really I noticed that I cope a lot when I'm in the moment, which I mean, like, that's the emotional aspect of trading, right? But the two main things is that, one, on this most recent trade, hold on, my ADHD is getting to me. Let me just say, obviously this trade, the reason why I didn't like it was because when I saw dollars candle get close so deep, I was like, oh, it's obviously reversing, when it didn't even trade past the for value gap. So I just got scared there. That's crazy. And then obviously we were still inside this 5-minute and swept the short-term liquidity. So that would have been perfect. Like I really shouldn't have closed this trade. Now, anyways, like I was saying, let me close the replay and then go back to where we were. It was just outside of my kill zone. Like, it's as simple as that. So the two actual main lessons here is that obviously when it's this far out of my, we were in London lunch. Like, I'm literally trading London lunch. Yes, it looks like it was second stage distribution, right? It looked better for second stage distribution on Euro right here. I mean, this looks really nice, right? And but I'm outside of the kill zone, right? Like, I'm outside of the kill zone. There's no other way about it. I shouldn't have taken the trade because I was outside of my London kill zone. And then the second thing is the 30-minute stop loss. I was saying entry earlier when I was talking about it, but my stop loss needs to be on the opposite side of the 30-minute engulfing no matter what. So as long as I followed those two rules, I wouldn't have taken a trade. This should have just been a no trade day. Clearly, right? But yeah, I just wanted to clear that up and show the example that I was talking about.